Alright, so I'm going to go over this chart, and this is just part of my daily routine to make sure that, my skills are sharp. And I suggest that, I don't really do this for, people subscribing or anything like that. I could care less. And you should too, the whole idea is to develop the discipline and sharpen your skills so that you know what you're doing. Because, when you put money on the line, it counts. Anyway, so basically the market topped out over here and there was some distribution here. But what we want to see is that were there any signs of distribution or anything like that? Anything telling you that the market was in trouble? And if so, what was it? Right? So where is it? Alright, so what you're looking for is basically selling and weak demand as well as failure. Okay, so all basically bearish indications. Alright, at first on the left hand side all you see is bullish action all over the place. There is one indication immediately that's telling you, hey, you better watch yourself, and that's right here. When the market made this final upwave here, there's extremely heavy volume. If you take a look at the volume pane. All right, since making the trend, the uptrend, since initiating the trend, these three, 1, 2, 3, have huge volume. Okay, they have huge volume and even more reversal volume. So I believe that was an indication that there's extremely heavy buying, and that means the other side is selling. So I think that this evidence here is telling you that this is a climactic move. Okay, what else do you see? I think a lot of the momentum indicators will show you this, a diversion. It doesn't matter what momentum indicator or whatever price time based indicator, but as you can see, the diversions are clear, high volume, so there is some evidence. Okay, now still, is that enough evidence to go short? Not in my book, because the trend is clearly up. Any breaks of support? No, nothing. Then we see this. Alright, that damn. That right there is 188 volume. Okay, now the game is changing. That volume is the biggest volume, I think, throughout the entire day. Let's see, 188, probably since right around here. Okay, so within this trend, that's the biggest volume. So now you have something. And even now, would I go short? I wouldn't go short. The trend is still up. And I want to know what kind of volume is this? Is this effort reward volume? Is it something else? But for sure, this kind of juice is heavily suspect. Okay, now the market goes up to the area of high volume, basically the highs, to retest the highs. Okay, market does that, it gets rejected and makes it first lower low. Excuse me. Ooh. So it makes its first lower low. That's noteworthy. Then again it goes into that area with high volume and it goes right back down. So the question is, what is this high volume activity here? What is that high volume activity? I'll try to zoom in. You might not be able to see so well. What is this high volume activity? This high volume activity is someone selling off this resistance area. How do they know this is a resistance area? Because before, when the market went to it, it didn't find any buyers. Hence the low volume. Okay. So after the low volume, it made a lower low. Then it retested, and there are guys that noticed that the market's having trouble getting above this area, this climactic area. You know, this brick wall over here. It's having a lot of trouble getting to that. And when it does go back to that area, there's high volume. That's evidence that either people are selling at that level, or whoever is stuck wants to get the hell out. Okay. And then there is one other bearish indication. By the way, when Wyckoff, if you read his study that he did, basically the way he did it, he wasn't really, he mentioned a bunch of buy and sell, you know, the first place to buy, second place to buy, third place to buy. But what he used to do was, it wasn't as clear cut as finding a signal. It was based on bullish and bearish indications, and he would take a number of bullish and bearish indications and weigh them to determine, based on his judgment, you know, whether it was a good time to go long or short. So that's what we're doing here, is just looking at the indications. There's no trigger or anything like that. It's just observing how this trend is gonna go, how this trend, what are the bearish indications in this trend, to see, you know, because this stuff happens all the time, you know, and to learn from that. So the idea is, what are the bearish indications so far? 1, heavy climactic volume, very heavy climactic volume. The climactic volume up here. Second was a test of that area, which was rejected and made a lower low, which is the second indication. There's also a third indication, and that's this heavy volume in the middle right here. You know, that's pretty heavy. Alright, so, but let's just start off with the first indication being heavy climactic volume. The second, price is unable to get above it and instead makes a lower low. The third is that as price goes to that area on high volume, it's unable to press. Why? Because they're selling off the highs. They're selling at this level. So that is your third bearish indication. Finally, what happens is price goes back down to support, pulls back into that high volume brick, and what happens? You get a reversal on pretty heavy volume. This is the heaviest volume in the session, I think. or the second heaviest, or at least the heaviest in the morning time. This is where the market, in my opinion, made a decision right there. That's the point where a decision was made to break the back of the uptrend. Okay, so now let's put it again. First bearish indication, climax, which is, as you know, is ending action. 2 is lower low. 3 is a high volume attempt that failed, and instead there were sellers at that area selling. 4 on the retest makes a lower high and has a high volume reversal. And then the 5th indication is the follow through. Okay, so those are the 5 indications. Now you in your mind, there is a some people will also see an upthrust which occurred right there. Right there was an upthrust. So anyway, so from this, what I think is probably the most critical point is that high volume brick, which is the impulse that basically broke the trend of this market. It is pretty evident right over there, because as you can see, look at the volume right here. See that? So it's going sideways for 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14 bars, right? And the rest of the session was overnight. So as you know, it's very I don't know, it's a little difficult because overnight volume, and then during the morning it's difficult to judge, and a lot of crazy things happen overnight, like stop runs. So anyway, yeah, there was huge volume here, but in the morning section around 8:43, you see the key, which is this, when everyone's looking at it and ready to jump on board, throw heavy volume, and it has follow through, and that's all she wrote. This last green brick is your last point of, I forget what it calls, supply or support, but whatever. It's your last point of demand. I don't know what they call it, last point of support or last point LPSY, last point of supply. But that's really the last point of demand, because that's the last point where demand tried to enter and fail. And I don't know why, in the course they call the last point of support LPS, and the other, from the bearish perspective, it's last point of supply LPSY. But these terms are irrelevant to me. The point is, this is where demand attempted to enter, and it showed totally that it couldn't do jack right after this reversal right here. And even that, you don't really need to see it. The high volume brick is showing you pressure and with follow through, and it's going to go break through. It will break through, and that's what happened. So as the market goes lower, there's a spot here that has not been touched, which I believe will get tagged probably tomorrow, and I know trades can be set up off of this area, and very likely it's a high probability area. This right here, the 33, 36 and the 77, this area hasn't been tagged by an up wave. I think that this area is going to be very interesting when price goes up into this area, how it reacts. This, in my opinion, is a supply zone that, heavy supply, and they probably broke the market at this area. I think this was this break. Alright, let's see. Yep, that's the area. That's the break of the. That's the break. That's the exact point we call breakthrough ice, right? So when price gets into that area, it is in. I want to see the reaction, and I think trades can be set up off that area. This is what the high is 23354 to 23330. So 23,330 to 23,354. All right, and on the Dow. Okay, so now price continues lower, pulls back, and goes down. As it's going down, you know, heavy volume came in to stop the down move. That is evidence. Right there, 132. You know, during lunchtime, someone came in, or whoever, I don't know. They came 132, and I think this is in 10,000s or thousands. Anyway, so 132, and then followed by 71, followed by low volume, followed by a high wave. So, you know, that's the volume off the bottom that came in to stop this downtrend. Now, is this a temporary stop or a more significant stop? We don't know. We don't know. Nobody knows. You know, but these areas really should be marked. Here, right here. You see how it's going back to this area and bouncing off of it, and this here. So we'll see how this plays out. We'll see how this plays out, but watch the higher area that I mentioned, 23,330, 23,350 in that area. Alright, now the next step is really to take a look at the point figure. By the way, you know, these channels, these are Keltner channels. I use them. They're just measuring tools for me. There's nothing special about them, but they're really good measuring tools, and I understand them. So the count off the top, the count off of, I think this is 23,400. The count off this level, 23,400. 23,400. It's basically in that area has been achieved. Okay, so the count off the 23,400 area has been achieved. Now, is there a larger count? I'm not sure, but I know like someone might be seeing, you know, the left hand side. Let me see this. Where's my arrow? You know, here. This never. And here. So is that a bigger base that's forming? You know, that I don't know yet, and I'm not going to combine these phases because this market is extremely strong. Very, very strong market. And even if you take a look at the higher time frames, I mean, this is like a little, this is not even a scratch. Look at this. I'm looking at the higher chart. do you think this market is in any trouble? I don't think so. There is heavy selling. Let's see. There's the heavy selling up there, but I mean, what do you expect? You have 1, 2, 3, 4, 5, 6, 7 bars in a row, green, closing above the Keltner channel, giving overbought signals repeatedly. It looks to me like maybe there'll be a little cool-off period. I think that support should be, or at least the prior low would be right in that 23.1 area. Let's see what happens there. Or it might just spring or just pull back and do an ABC correction. We don't really know. I don't really see anything bearish on the high time frame other than that one bar with heavy selling right there. Alright, so someone sold from the highs and there might be a pullback, but it's not really enough to say the trend has changed. It's not enough to say, oh no. It's just a minor 2 brick pullback. Alright, 2 bars. Is that something, a cause for concern? I don't think so. Alright, take care.